So about our company, as Nick's already mentioned, we have the auspicious honour of being the 5th largest pure exploration and production oil and gas company on the ASX today, with a market cap of just under 450 million Australian dollars. It's a wonderful achievement when you consider where we were only 3 years ago, or not even 2.5 years ago, before we drilled our discovery wells offshore Senegal. As a result of making our large discoveries offshore Senegal, we now have a strategic focus on what's called the MSGB Basin, which is the Mauritania, Senegal, Guinea-Bissau Basin. And I would say that now we would include the Gambia in there as well, of course. And I'll talk a little bit more about how we've expanded our portfolio as we go forward in the presentation. We now have 8 exploration permits in our area of interest, which is the MSGB Basin. And of course, these are following the huge discoveries that we made back at the end of 2014. As you'll see from our presentation, and we announced last week, we actually have just finished the appraisal drilling, or the evaluation drilling, on our large SNE oil field. It's been a fantastic appraisal program. I'll talk to that a little bit more in the presentation, but we're now looking forward to pre-development studies with a view to first oil in 2021. We currently have a very strong balance sheet thanks to the capital raising we completed in April, where we raised $80 million. We have around $100 million in cash at the moment, and that will stand us in good stead over the next couple of years. With our current plans, we should be well funded to FID, which is the final investment decision, moving into the development of the SNE field. That's expected to be in the first quarter of 2019, so we're well funded until then. We have a strong commitment, of course, having been in Senegal for 10 years, to the social programs and to capacity building in the countries in which we operate. And we're very proud of our reputation, particularly in Senegal, in the social programs and the involvement we have with the communities in which we operate. As you would have seen from an announcement we made a month or two ago, we have also formed a strategic partnership with CNOOC, the Chinese national oil company, to look for new blocks offshore Senegal and the Gambia, and I'll talk a little bit about that as we go forward as well. Most companies actually finish talking about, with their presentations, talking about their community and social programs. I wanted to lead with it because our community programs are very important to us. They give us our social license to operate in the countries in which we are exploring, and in actual fact, they're extremely fulfilling and enjoyable to participate in as well. So shareholders' money is not only going to exploring, but it's going to making sure that we keep our social license to operate. And this is an example of some of the programs we've been involved in. One which we've recently announced is we've started a program to renovate primary schools just out of the capital of Senegal called Dakar. And Ben and I had the pleasure to be at the opening with the Minister of Energy a month or two back in Dakar. And it was a terrific day. There would have been easily 1,000 people there come out from the community to see the renovations we'd done in the primary school. Pretty basic conditions that most people in Senegal live under. And it's wonderful for us to be able to provide computers, update toilet blocks, put new roofs on rooms. The library used to leak and water used to flood into kids' desks. No more, so it's wonderful. It happens to be one of the top primary schools in the country that produces most of the future engineers who go on to a specialist engineering school in Senegal. So we're really hoping that some of these 11 and 12-year-olds in 10 years' time will be graduates in engineering, geophysics, accounting, law, and all of the subjects that will need to be covered and all the people we'll need to employ as we build the oil industry in Senegal. It's hugely rewarding to participate in that sort of thing. So our shareholder base, thanks to our last capital raise, has changed a little over the last few months. A bit of a summary of the spread of our shareholders. Our top 200 shareholders now own 70% of our company. And if we do an analysis of those top 200 shareholders, we see that we have about 46% institutional holding in the company. We have about 13% family office, led predominantly by Tim Robertson and the Farjoy Group out of Sydney. We have 31% private investors and roughly 10% others, and that includes banks, staff and board, and other people. We now have 3 substantial shareholders, in other words, more than 5% holding in the company. Meridian Asset Management, who have their holding in the US, but they're based out of Geneva. The Robertson family, as I mentioned earlier, and also the Fidelity Group, one of the world's largest funds, and they hold in a number of holdings throughout the world. So it's wonderful to be able to get some very large institutions interested in FAR. Sitting just below 5%, we have a few others, and I think it's purely recognition that there's huge upside yet to be gained in FAR, to be getting these big banks involved in our register. They make it very easy for us to raise money going forward, and I know Nick mentioned at our last AGM last year that as we progress into development in the future, we're going to need big licks of cash, and to do that you need big institutions supporting you, so it's wonderful to have them on board. They've also been buying on market and driving our share price up over the last couple of months, so that's been terrific for all of us. 2016 was possibly the most extraordinary year of my career, and thoroughly enjoyable, I have to say. And I thought I'd take the time to just list a few of the achievements. It's easy in May 17 to forget that a year ago we had only just started evaluating the SNE discovery, and we had no feel yet for whether we were going to have the size, the deliverability and the connectivity of the oil in the field that we were aiming to get. And within a short period of time, we've ticked off all of the appraisal objectives for the SNE evaluation. It's been an outstanding success, and full credit to the whole team of FAR and our partners that have been involved in that process. We've drilled 4 successful wells in 2016, all in service to appraising the SNE field, and subsequent to that, of course, in the first 3 months of this year, we've drilled another 3 successful appraisal wells. Last year we increased the contingent resources, the 2C contingent resources in the SNE field from 330 million barrels, which we had released when we made the discovery at the end of 2014, to 641 million barrels. Amazing that through the appraisal process we could double the size of the oil field. There's an expression that good fields just get better, and this field certainly is one of those. We passed the minimum economic field size. In order to proceed with the development, we recognised that we needed a minimum of 200 million barrels, and we've easily surpassed that now. In fact, we have oil in spades out there. We have made a statement last September saying that the field looks to be commercially viable to develop, subject to ticking off the last appraisal boxes. So with only 21 months between discovery, we could make an announcement on the commerciality of the field in an oil price environment where the oil price was $45 at the time. Is absolutely staggering. And again, full credit to the team and the wonderful geology that we have in Senegal. And good fiscal terms as well. As I said, we completed some high-impact social programs, and we managed to change the exploration focus of our joint venture in Guinea-Bissau to focus on the shelf edge, the extension of the SNE play down into Guinea-Bissau, and we'll talk a little bit more about that later. We captured an option in the Jafir block, which is directly to the east of the SNE discovery, and something that was a thrill, and Ben and I again were in London and able to receive the award. We were awarded the Breakthrough Company of the Year for Africa, and that's actually voted on by our oil industry peers, so it's actually more meaningful than a lot of other awards that we get and accolades that we get. So 2016 was a fantastic year for us. Share price performance, of course, continues to be an issue for us, and I thought it would be useful to plot what our share price has been doing over the last year in comparison with the price of oil and then the ASX 200. Of course, we're not in the ASX 200, we're in the ASX 300, and most of the ASX 200 players are purely dependent on oil price. They're producers and we're not. So you can see a good correlation between the green curve here, which is the oil price, and the ASX 200, which is in blue, and then the FAR share price in red. We tend to follow the oil price, as you can see, broadly, but in mid last year, when a lot of stocks were hit quite hard with a slump in the oil price, most of the explorers were hit a lot harder than the producers, and in fact the producers have recovered a lot quicker than the pure explorers. So we're not on our own here. We are an explorer, we're not a producer, so it's taken us a little longer to recover. So as I said, the oil price stabilisation has been good for all the producers. We're still viewed as an explorer, unfortunately. And the other thing that really knocked us from the side last year was the sale of the ConocoPhillips 35% in the Senegal project. It was sold at a pretty low ball price, and unfortunately that price per barrel for Senegal is stuck, and it's not helping our share price. We'll talk a little bit more about that as we go on too. Oops. What is really positive is that 2017 has got off to a great start for us. So I've plotted the same metrics, but starting from January this year until now, you can see that in relation to the oil price, in relation to performance of the ASX 200, FAR is outstripping our benchmarks. So long may that continue, and here's hoping our share price continues to rise as we make good announcements going forwards, because there are going to be a number. So what happened in our industry last year? It really felt like we were in a bit of a bubble, to be honest with you. We would go overseas, talk to peers, go to conferences, go to Senegal, talk to most of the other companies who are involved there. And FAR was getting on with drilling, making discoveries, appraising successfully, raising money because we had a wonderful project, field was growing, everything was wonderful. And it was easy to get lulled into a sense that the oil industry was actually doing all right because we were in our own little bubble doing fantastically. But in actual fact, 2016 was a dire year for our industry, and it's reflected in the oil price. By mid-2016, it's estimated that 360,000 workers from oil companies alone had been laid off due to the downturn in the oil price. And at the same time, just under 50% of service company workers had been laid off globally. It's been a huge rout in our industry. We've lost a lot of expertise, and most of the larger companies have been reshaping themselves for what we call a lower for longer oil price that's going to hover between $50 and $60 over the next couple of years. So a lot of balance sheet rejigging, selling of assets, getting rid of people, taking place amongst most of the larger oil companies. At the same time, we've been putting out great news, and I guess in the backdrop of this tide of really bad news globally, it's not surprising to see that perhaps our share price hasn't moved as much as we all would hope. And we're now seeing signs that there are some green shoots in our industry. Most of the large companies have restructured their debt, they've taken the hit and sacked their staff, they've sold the assets they need to, and in fact we're seeing a lot more liveliness around in the industry, particularly when you go up to Europe and the US, who tend to lead. What's happening in the US is most of the industry is very much still inward-looking, looking at the Permian, the shale, onshore production, and companies are sharpening themselves there. What's coming out of the UK is that we're seeing a lot more companies who are particularly explorers in Africa starting to open their eyes and have a look around for assets. And this is particularly good news for FAR as we move in to try and farm out our Gambian acreage, and we'll talk some more about that as we go along. One of the great things I will point out about the SNE field development is that the break-even oil price looks to be heading towards less than US $35 a barrel. So if the oil price does stay somewhere between $50 and $70 over the next couple of years, and it's looking to be higher than that, if you believe the forecasts, when we go into production in 2021, then this is going to be a very profitable oil field going forward. So on the back of what was going on in our industry and what we had been doing in 2016, when we set our strategy for 2017, it was decided we would continue to focus on the MSGB basin, and in particular on the shelf edge play that houses the SNE oil field. And it not only sits in Senegal, it extends to the north and to the south, but predominantly we see most prospectivity to the south, into the Gambia and into Guinea-Bissau. And in Guinea-Bissau, of course, fortunately we already had 3 blocks. Competition for acreage in that part of the world is getting hot. We've seen CNOOC enter the area by farming into a block operated by a private company in the AGC. We've seen BP farm into Cosmos's acreage to the north of us, offshore Senegal, in a very big deal. We've seen Total just get awarded the only open block offshore Senegal in what was a heavily contested bid, including ourselves in partnership with CNOOC. And we're seeing a lot of major companies sniffing around looking for assets and opportunity to get into this part of the world. We already have the lead. We have a technical lead. We also have a lead in terms of having good relationships with the governments in the area. But that lead will only take us so long before other big companies catch up. They can throw a lot more resources at it than we can. So number one, it was part of the reason why we formed a relationship with CNOOC to allow us a seat at a much hotter table, if you like. It's going to require a lot more cash and grunt to get into new acreage. And number two, we really have to move if we're going to take advantage of the technical lead that we have in the area and the geological lead. We've also continued our strategy to keep all our options open about the future. And that means that we are going to be planning to head for development in the SNE field, but it also means we're keeping options open to look to see if there's any value to be gained from monetising part of our discovery in Senegal. At this stage, we're heading towards development. It looks as though the costs of development are going to be very lean. The numbers that we will be showing you later on the costs of development look to be coming down even from the assessment we made mid-last year. And most of that's due to the fact that infrastructure costs and drill rigs have got very cheap in the last 12 months. We still have a strategy of not paying for exploration wells where we can help it, and that's going to drive us to look for a partner to come and drill with us in the Gambia, and we've started that process now. This year, we also, well, since our last AGM, we also set up a YouTube video site, and we have a Twitter feed going, and we're embracing different forms of communication with our shareholders to make sure that everyone's informed about everything that we're up to, in an effort to make sure that the market obviously is informed, but also to try and stimulate some buying in our stock, and hopefully the share price going up as well. Our other strategy, of course, is to make sure that we remain fiscally very strong. We're in a game with some big boys, and we don't want to ever appear vulnerable, and our latest capital raising has certainly put us in that position. So our strategy has already started to work, and we're only 4 months into the year. We have negotiated entry into 2 blocks offshore the Gambia. I'll show you a map of that as we move through. We've executed this area of mutual interest agreement with CNOOC. We've been talking to them for over a year now about forming partnership in this part of the world because they're very interested in the Senegal, Mauritania area. We've already upgraded our view of the undrilled prospectivity offshore Senegal. It now sits at greater than 1 billion barrels. So that's outside the discoveries we have in SNE and in FAN. This is a huge achievement for us. And we're obviously drilling at the moment, FAN South, which is the first pure exploration well we've drilled since we drilled our 2 discovery wells back in 2014, and really looking forward to seeing the results of those come around the end of June. This year we've raised our $80 million. We've completed the appraisal of the SNE field, which is a huge milestone for our joint venture. And going forward, we are going through the process now of reviewing our contingent resource estimates for SNE, and also looking at updating the development plan, and we'll be putting out some numbers in the coming months on the revised economics for the field development as well. So here we are in Africa, our area of focus. We have 3 blocks offshore Senegal, all held under the one production sharing contract with the government. We now have our 2 blocks in the Gambia, A2 and A5, and 3 blocks offshore Guinea-Bissau. We're non-operated with Svenska as our operator. We still have our block in Kenya, but I have to say not much has happened in the last 12 months in Kenya. So let's focus on Senegal, because that's where FAR's big story is. Our exploration acreage is shown here in the orangey red colour offshore Senegal. The Gambian blocks are shown in the dotted area, and then Guinea-Bissau blocks are shown further to the south. These are all part of the larger MSGB basin. We've of course been in Senegal since 2006. Some of you may remember we had a contingent from Senegal out last year for our AGM to celebrate our 10th anniversary. It was a wonderful time, and we are the longest standing oil company that has activities offshore in Senegal, and we're held with some regard because of that. We made our big discoveries back in the end of 2014, and of course SNE field, don't forget, was ranked as the world's largest oil discovery for 2014. It stood as the world's largest oil discovery for a while, but it's been pipped now by ExxonMobil, who in partnership with CNOOC have made a giant oil discovery offshore Guyana called Liza, and indeed another one called Awowo offshore Nigeria. It's amazing, and we have to pinch ourselves really to think that we're up there with the big boys. You know, FAR has been involved in 2014's largest oil discovery. In 2015 and 16, that mantle belongs to Exxon and CNOOC, the two largest oil companies in the world. It's a fantastic peer group to be involved in. The joint venture offshore Senegal has invested about $800 million in drilling offshore Senegal to date, and most of that's gone into drilling the 9 deepwater wells that we have drilled offshore, in predominantly improving up the size of our SNE oil field. As we announced only a week or so ago, we've completed now the appraisal of SNE, and we're moving towards our multi-billion dollar development of the oil field going forward. We still have our strong commitment to social programs and also capacity building in country. Senegal really doesn't know what's ahead of them. They haven't had a big deepwater offshore oil development ever, and they are scrambling now to build the capacity to be able to administer and handle what's coming for them in the next 3 or 4 years' time, and we're assisting in that process. So I'm going to take you back to mid-2014, and this is what the state of play looked like offshore Senegal. It's a funny thing, but we always complain that Murphy's Law says oil fields and mineral deposits are always found on the borders of countries or cross-border, and yet what makes me smile here is that there was a lot of exploration take place in Mauritania and a lot of exploration take place in Guinea-Bissau to the south of Senegal, but until we drilled, there was not one oil exploration well drilled for 40 years. The last one was in 1972, and there was never a deep water well drilled offshore Senegal. It's amazing to think that even though we've been taught this lesson so many times, the industry obviously thought the geology stopped at the border of the two countries. At this point, back in, before we farmed down to Cairn and ConocoPhillips, FAR owned 90% of the exploration offshore Senegal, and most of you will remember that we farmed out to Cairn and ConocoPhillips back in 2013 prior to drilling the wells, and we now have a 15% stake in the project. So what does offshore Senegal look like now? Well, we've drilled 2 discovery wells, FAN1 and SNE1, 7 appraisal wells now in our acreage. We've had 100% drilling success to date, which is almost unheard of, and we're touching wood that it continues. There have been huge and major gas discoveries drilled to the north of our acreage by Cosmos and their partners. I'm hoping this is a pointer. Oh, it is, but it's not going to work on the screen. So just to the north of our acreage here, this is where Cosmos and BP have made enormous gas discoveries, about 60 TCF in reserves sitting up there, or resources sitting up there at the moment, and they're moving towards development, hopefully in the early 2020s. BP farmed into the Cosmos acreage at the beginning of this year in a multi-billion dollar deal, and it was the first IOC, big international oil company, to be introduced to Senegal. Subsequent to that, CNOOC have farmed in to the south of us, and Total, as I said, have been awarded the only open block offshore Senegal about a month ago. I was at the Africa Independence Forum last week in London presenting, and one of the industry consultants stood up in his keynote speech and said that the SNE discovery actually saved African exploration for years. And he's probably right. There's almost no frontier exploration wells gone down offshore Africa since SNE. There's only just been a rejuvenation of exploration drilling now. But until FAN and SNE, there'd been a series of failed frontier exploration wells. And the industry really does believe that the Senegal discoveries saved the African oil industry. So how wonderful is it, again, to be involved in such a wonderful project? I'm not going to labour too much on the geology, but when we first drilled offshore Senegal, we drilled a Fan 1 well, which can be seen here on the left, and then we drilled SNE1, which was the mother lode really up on the geological shelf, or the paleogeological shelf, as you can see on the cross-section. What was so exciting about drilling our first well here in Fan 1 was that we found a 500-metre oil interval in the well. It wasn't all in the one column. We saw a number of different oil types as we went down, but the mere fact that we saw 500 metres of oil in that well told us that we had a really prolific source rock generating oil in the deep water offshore Senegal. And anything we drilled up dip from Fan 1, as long as there was a good valid structure, was likely to house oil. When we went and drilled up dip from Fan 1 in SNE1, as I said, we found the mother lode. We found a beautiful container of oil, about 100 metres of gas cap sitting over the top of a 100-metre gross oil column, and at the time, we released that we had a 2C contingent recoverable resource in the field of 330 million barrels. And that earned it the mantle of the world's largest oil discovery, by the way, for 2014. At the end of 2015, we started the evaluation or appraisal of the SNE oil field, recognising that there were three key ingredients to proving commerciality of the field. We needed to prove the size. We needed to have a minimum size of 200 million barrels. We needed to prove the deliverability, and by that, it's how easily will the oil flow out of the rocks. And then we needed to prove the connectivity of our upper reservoirs. So the SNE oil field broadly consists of two families of reservoirs, some really big, thick reservoirs that we see at the base that we call our lower reservoirs or our 500 series reservoirs. And then draped across that are thinner reservoirs we call our upper reservoirs or 400 series. Now the big, thick basal reservoirs are continuous across an area. We can map them very clearly on our seismic data, but not so our upper reservoirs. They're thinner, they've been deposited in what we call a sediment wave depositional environment, and connectivity across the reservoirs was questionable. Now, what does this mean for us if the connectivity is questionable? It actually means that for us to extract the oil from those reservoirs, if the reservoirs are not connected, we need to drill a lot more wells to extract the oil. However, if the reservoirs are connected, we can drill less wells in the development phase because we can effectively extract the oil from a much bigger area. Now, we needed to know what the footprint of that area we could extract from is so that we could finalise the development plan for the field. And the way we do that is we run what we call an interference test to test for the connectivity. And this year, our appraisal was all about running the interference test. So the SNE5 and SNE6 well that we have drilled this year and just completed have allowed us to make an assessment of how connected our 400 series reservoirs are. To our surprise, we actually saw connectivity before we ran the extended flow test period, and that was wonderful news for us because one of the risks with running an interference test is that you get a null result, meaning that you don't get any signal back at your listening well, which was SNE6 in this case, or that it takes a long time for your oil to flow from the pulsing well to your listening well. And by that I mean that the oil might be following some circuitous route underground to get from one well to the other, and we'll need to be listening to that listening well for some time to understand how connected the reservoirs are. By seeing really quick connectivity means that we've not got a tortuous route to connect the oil from one well to the other, and we're sampling from the one pod of oil. That makes it much easier for us to then pick up our model and drop it across the rest of the field and understand how many wells we need to drill in a development. So let's just revisit the size. Before we drilled SNE, it was 154 million barrels on a P50 basis. Post-discovery, as I said, 330. And then over the period of 2016, whilst we were drilling the appraisal wells, we underwent some upgrades to the resource assessment. And the last one was in August last year, and we now have 641 million barrels of oil on a 2C basis. The 3C is up over 1 billion barrels, and it would be fantastic for us to get closer to that 3C number, and I suspect we will be as we get some production history and learn more about the recovery factor in our primary reservoirs. As I said, deliverability and connectivity over the appraisal drilling process was proven. So we flow tested 4 of our wells, SNE2, SNE3, SNE5, SNE6, and had fantastic flows from all of the reservoirs. In the primary deep 500 series reservoirs, we flowed at 8,000 barrels a day, choked back. Our engineers told us that under a development or production scenario in a horizontal well, we could get up to 30,000 barrels a day from these wells. So this is a really world-class reservoir that we're looking at down in our 500 series. In the 400s, we flowed around 5,000 barrels a day, which is a fantastic flow rate and certainly justifies moving forward into development. And you'll see from the plan that we released last year for a preliminary development scenario that the average EUR per well or production per well under development is about 9,000 barrels a day. So this is a terrific field and world-class reservoirs. One thing that we realised post-drilling our appraisal wells is that the field is a lot larger than we had originally mapped. So you'll see here on this diagram to the south an outline of the SNE field, green being the limit of the oil leg and red being the limit of the gas cap on top. SNE field is the southernmost prospect you can see here. It's not going to work on the screen, but to the south. And we had always mapped 2 lookalike prospects that sat to the north, one called Sirius and one called Speaker. It is now very clear to us, through drilling our appraisal wells, that the Sirius prospect is actually a northern extent of the SNE field. And we've had risk, our auditors in the office over the last couple of weeks, and it's highly likely that we'll be bringing some of the oil that we see in the Sirius prospect into contingent resources in the SNE field going forward. So SNE will certainly grow. It's kind of academic. It's wonderful to have really big numbers, but the development that we're looking at is what we call a phased development, and we will only be developing the core of the SNE field first, and then we will be stepping out and tying back the flanks of the SNE field in time. And the reason for going for a phased development, of course, is to get quick cash flow and restrict the size of the development and the capex from day one. So now we've proved size, we've proved deliverability, and we understand connectivity, and pre-development studies are well underway. One of the things that we touched on earlier, and I think someone asked a question about it, was drilling costs coming down. This has been a huge boon for us and our joint venture over the last 2 years. When we drilled our original discovery wells, we paid $675,000 US a day for the Cajun Express, which I don't know what adjectives to use to describe it, but it was a dog of a rig is really all I'd like to say. And we had up to 70% non-productive rig time on the Fan 1 well, and that really cost our joint venture dearly. And the 2 wells we drilled, Fan 1 and SNE 1, cost us $350 million US to drill the 2. Roll forward to 2016, where we drilled 4 appraisal wells. We secured the Ocean Rig Athena for $330,000 US a day. I'm just talking about the rig here, not the total spread rate, because there are other costs of drilling as well. So less than half within 12 months. The rig rates have been slashed by less than half for deep water drilling. We had about 11% non-productive rig time in 2016, and roll forward again a year, and we've secured a fantastic drill ship in the Stena Drill Max for just over $190,000 a day, so almost half again. And we've seen about 3 to 4% non-productive rig time. Thank you, Lee, he's nodding to me. 3 to 4% non-productive rig time in the 3 wells that we've drilled to date. So it's not just the headline rig rate number, which has fallen by 70%, but what's actually really important to us is making sure that while we're spending that $190,000 a day, that it's on drilling and not on sitting around for maintenance and other issues. So this year, we actually managed to squeeze in a 3rd well into the budgeted 2-well program, almost for the price of the 2 wells. And that was because of efficiencies on the drill rig. So long may that last, and I'm very happy to say that we are in a fantastic period to start the development. It's not looking likely at all that the cost of deep water drill rigs offshore Africa are going to increase anytime soon. We're seeing some movement in drill rig prices onshore US where there's a lot of utility. That's not the case in West Africa. And we anticipate that we'll be entering into a development phase when we're looking at very low capex and very low drilling costs moving forward, which is great. So we're now looking forward to the development of SNE. This is a development concept that we released last September to the market. It's, as I said, focused on the core of the SNE field. And you can see the flow lines and production wells and water injection wells that we would anticipate in our plan on the map in front of you. The development will be off an FPSO, so a floating production and storage offtake vessel, and with subsea tiebacks. The development planning has already started, and it's looking likely, well, last year we reported that capex per barrel would be sitting between $12 and $15, and OPEX would be sitting at about $10 a barrel. We think particularly with the capex we can shave up to 20 to 30% off that number purely because of the rig rates coming down. We've seen a big lowering of rig rates in the last 12 months. So last year, break-even oil price reported by Cairn, our operator, was $35 a barrel. We're hoping we'll be able to get under $35 a barrel. And if we're looking at an oil price of $70 a barrel in 2021 when we produce our first oil, then the NPV, or the net present value per barrel, is about $12.50 US a barrel. Now, when you think that some of those costs are going to come out, we think that that's actually a reasonably conservative estimate, and it could get a fair bit higher. Far in their development concept work are forecasting peak production about 140,000 barrels a day. So this is a big FPSO we're looking at here. Now, what is happening at the moment in the joint venture is that the joint venture is aiming to put out a joint venture statement on what the development concept will look like, and that's not due to be coming out until August, September of this year. So these numbers will be revised then. Most of these numbers were put together September 2016, but there's been a lot of movement, as I said, in the meantime, in costs in particular. So as we stand today, we're about a week into drilling the first exploration well we've drilled since 2014. It's very exciting. We're heading back to the very deep water. It's about 2 kilometres of water down to the southwest of our exploration permits, drilling a well called Fan South 1 at the moment. It's in the southern Fan prospect, as you can see, at the very southwest of our acreage. It's an important well because if we find oil in this particular well, it's within tieback range to a development at SNE, so it will help us scale the FPSO as we move forward into the development. In itself, we have a stacked target, and we have estimated 150 million barrel target on a P50 basis. So 134, I should say, million barrel target on a P50 basis. So it's a wonderfully exciting prospect in its own right. And we're not down to the money part of the well yet. We're just landing the BOP at the moment. But drilling efficiency is, as we've seen on the previous 3 wells, we expect to drill a lot faster than we have budgeted for. And we're already ahead of budget. Although it's always a bit nervous saying that because you never know what can happen when you're drilling frontier deep water wells, and I can see Lee cringing at me at the back of the room. But as we said, we saw 500 metres of oil in the Fan 1 to the north, and anything we find in Fan South 1 will also help us to understand more about the geology of the Fan 1 discovery that we made to the north. As I said earlier, thanks to collecting a very large new 3D seismic survey at the end of 2015, we've now mapped 1 billion barrels of undrilled potential offshore Senegal. So there's a lot of oil to be found yet in these blocks. So in line with our strategy, we wanted to use our expertise in the area and our knowledge of the governments and contacts in the government to expand our portfolio, and the absolutely no-brainer logical place for us to go was blocks A2 and A5 to the south in the Gambia. So Senegal as a country is shaped a little bit like a Pac-Man, where the mouth is actually a country called the Gambia. It's got a checkered history, a bit different to Senegal. Senegal's Francophile, the Gambia is English-speaking. The history books tell you that the Gambia is shaped like it is because a British naval officer sailed his boat down the Gambia River in order to occupy the land for the Brits, and the border is the distance that the cannonballs would reach from the boat as he sailed down the river. So it's an unusually shaped country, and it is a part of the Commonwealth. Up until the end of last year, it was run by a dictator for a number of years and was a very difficult place to work. They had their first free elections for a number of years, and the dictator was booted out, and we have a new president who is very keen to stimulate foreign investment in the Gambia. They're one of the poorest countries in the world. Population of only 2 million people, ethnically very similar to the Senegalese. They're all effectively the same people. When you go to the Gambia, most people have got a brother or an auntie or someone who's Senegalese because the borders are so close and it's such a small country. Capital is Banjul. It's predominantly a tourist resort. The English embassy is based in Dakar, and on speaking to the ambassador, he says that the main reason they're there is to look after the 200,000 British tourists that get drunk and lose their passports on holiday in the Gambia every year. So the two blocks are directly south of our big discovery at SNE in Senegal, and they're blocks A2 and A5, previously held by an American company called Erin Energy. We've been talking to Erin for a number of years now and about farming into those two blocks, and finally concluded a deal in April this year. A deal which sees FAR take 80% equity in the two blocks and operatorship by paying some back costs of about $5 million to Erin, and also paying for the seismic data, escalating into the seismic data, which is going to cost us just under $5 million to complete the deal. The deal is still subject to government approval. Ben has, as Nick said, just yesterday got back from the Gambia, and government approval should be forthcoming. There are no big problems. Things are just moving a little slowly, partly because of the elections and a new regime in the Gambia at the moment. But there are no main reasons for concern. The blocks have a large 3D seismic survey already over them, which has been very helpful to us and kept the costs down, but it has meant that the government expectations is that there will be a well drilled towards the end of 2018. You can see here on the map we have marked with red the area of the 3D survey, and also where we see a prospect called Summer that sits just below the SNE field on trend. So this year is all about reprocessing the seismic data and integrating it with our seismic in Senegal to better map the Summer prospect in order to pinpoint where we'd like to drill. And we have just opened a data room and invited a number of larger companies in to see if they want to join us in the drilling of a well offshore Gambia. So this map shows you the prospective zone on the shelf offshore Senegal, with our Senegal blocks to the north and A2 and A5 to the south. You can see also where the Senegal SNE wells have been drilled in the centre of this prospective zone. It's exactly the same play as we see in the SNE field. It's got the same source rock. It's highly prospective, and we now have 8 wells that have penetrated into the key reservoirs that will be the key reservoirs for the summer discovery or the summer prospect. If we break down that prospective zone into where we see our prospects along that zone, you can see summer is completely encompassed in A2, Block A2, and we map about 500 million barrels of recoverable oil on a P50 basis. So this is a huge prospect in summer. It's a stacked play, and as I said, we're doing some more work on the seismic to pinpoint where we would like to drill. But dry hole costs at the moment are between 25 and roughly 30 million US dollars out here. So costs of drilling are definitely coming down. In fact, Ophir Energy just drilled a dry hole off Equatorial Guinea and announced that they had completed that in quite deep water for $25 million only a week ago. So costs are really coming down, making it much more attractive to go for some frontier exploration targets. This is a cross-section north-south through the SNE field that you can see on the right side, and summer. You can see the 500 series sands at the base of SNE drop well into the water. So the gas zone is shown in red, the oil zone is shown in green, and below the oil is water. So we are relying on the 400 series sands that we see in SNE that we've flowed already at, on average, 5,000 barrels a day, and we now understand the connectivity. They're our primary reservoirs down in the summer field. So as I said, we've already got 8 penetrations into these reservoirs, so we understand a lot about the geology. One thing we do know too is that as we head further south, we're getting closer to the sediment source, which is the Gambia River, and these sediments or these reservoirs are thickening. So the Gambia, a fantastic opportunity for us, and of course we'll release a lot more information as we pinpoint where we're going to drill and hopefully bring a drill partner along in the coming months. The Area of Mutual Interest Agreement with CNOOC is a fantastic achievement for a small company like FAR, and I wanted to spend a little bit of time talking about that. We've been talking to CNOOC for well over a year now about joining forces to explore in this part of the world. They are very keen to get a footprint in the MSGB basin. Like most of the majors now, they've conducted regional studies of the area and have decided how they want to enter. They approached us initially about forming an alliance with them where they could bring the larger company grunt and expertise, capital and facilities, and we would bring the political contacts and the local geological knowledge. And I must say that it has been a terrific alliance between us to date. There's been a meeting of minds. We think alike. They're a great group. We've been predominantly dealing with CNOOC's subsidiary in the UK. CNOOC some years ago bought a company called Nexen, who are a Canadian oil company, and they lead the exploration in the Europe, Africa, Middle East zone out of London, and they're called CNOOC UK now. They have recently farmed into a block further to the south, so they'll be drilling a well with their other partners offshore the AGC at that time. So the way our AMI works is that in any of the areas in this red zone you can see here that are up for bid, we have an agreement to bid together where we bid on a 70-30 basis, where CNOOC takes 70%, we take 30%, CNOOC take operating rights, and indeed we bid on the ROP block that was unfortunately awarded to Total just a few weeks ago. So that was the first test of our relationship. We have, CNOOC are also in the data room to have a look at our Gambian data, and it would be great if they farmed in and we could consummate our relationship with them. But we look forward to that being a very fruitful relationship going forward. It certainly gives us a seat at the table that little old FAR is getting muscled out of at the moment with big companies coming into the area. I don't want to labour too much on our other assets, but we do have some other assets, Guinea-Bissau being one for the next couple of years. We have, as you may have read in our recent announcements, recently changed the terms under which we're operating in Guinea-Bissau. We have increased our equity stake to just over 20%. It was just over 15% previously, and that's due to the government scaling back their participation in the project. Svenska are the operators based out of the UK, and we've also been awarded an extension by the government, and we are not due to drill a well here until the end of 2020. We believe that the extension of the shelf edge extends as far down as Guinea-Bissau, and there has been some 3D seismic recently shot that we are still interpreting with a view to seeing if we can identify some more S&E lookalikes, if you like, down in Guinea-Bissau for drilling. But that's one for a couple of years' time, and it's just feeding the pipe of projects that FAR has in this part of the world. A Kenya update. As I said, not much has happened in the last 12 months in Kenya, and this is primarily because it's been very difficult for us to get on the ground to shoot any seismic. Shooting some onshore 2D is the next step in our work program in Kenya, and because of civil unrest onshore, we have not been able to get our crews on board. It's likely that we will go into force majeure going forward and seek an extension from the government. There are elections coming up in August in Kenya, so not much is happening there at the moment, I'm afraid. In Australia, we had 2 blocks, and we have surrendered, or in the process of surrendering one of them. The 2 blocks were 457 and 458. You can see 458 up north here, in the middle of a very large regional 3D survey that we subscribed to a couple of years ago. There was a hole in that 3D survey right over the top of block 458 because we have some shoals or reefs within the middle of the block. One of the reasons why those shoals are there is because we believe that there are oil seeps, and you get a lot of biomatter feeding on the oil seeps that builds up these shoals or reefs. So one of the main reasons why we want this block is because we believe there's oil sitting under it, but we have not been given environmental approval to acquire our seismic over the hole in the seismic area. So we're working with the seismic contractor at the moment to design a survey that will pass environmental approvals with NOPSEMA, our regulator, and we're aiming to shoot the seismic over that hole towards the end of this year. And we're in the throes of applying for an extension with the government for the 458. FAR has 100% of this block, and we would like to get the 3D shot so that we can start the farm out process and look for a partner to come and drill with us in that block. But that's going to be a little way off yet if we don't shoot seismic till the end of the year. So moving forward this year, boy, it's been a fantastic run for the last 3 years when you think that we only farmed out in 13, made our discoveries in 14, started the appraisal in 15, finished it already, the appraisal, and starting to move into pre-development studies with a view to submitting the development plan to the government in about a year's time, and then FID in early 2019. We've had a 100% success rate offshore Senegal, which I think is unheard of. And as I said, long may it last, especially while we're drilling Fan South 1. We have a whole bunch more drilling to do offshore Senegal in terms of the prospectivity. I think that most of the exploration drilling now will be pushed into the exploitation phase in a year or so's time. So Fan South could be the last one we do. We may tack one more exploration well on to this particular program while the rig is working so well, but we haven't decided that yet as a joint venture. We raised our money in April in order to fund an additional 3 wells on the firm program. So the firm program ended up 3 wells. We raised money to drill another 3. Fan South is the first of those 3. I doubt we'll be drilling 3 more wells, but at least we're well funded for that and heading towards FID. So it's going to be a very exciting rest of the year as we release a review to our contingent resources and start to look at releasing information about the development plan, heading into submitting the plan to the government, our revision of the economics, and of course hopefully bringing you news of bringing a partner into the Gambia and well preparations for the Gambia. So the juggernaut keeps on moving, and hopefully some great news coming out in the coming